Welcome back, everyone. This week, we're going to be talking about my weekly performance report. I already put out a video detailing Green Thumb Industries earlier this week, so this will just be the weekly performance report, ticker symbols, position sizes, and weekly percentage returns. Note that if you want to look at this, you can go over to the description and there will be a link in there to this channel or to this publication, and you can go read it for yourself if you want to view other things. With that said, I note a brief overview of what Cup of Coffee Capital is. Read that if you want, but pause the video or go in the description box, click on the link and read it for yourself. However, let's skip all that. This is going to be just a quick video. I ended the week up 2.44%. It's looking like January is going to close out, I don't know, flat. And I consider anything that's up or down a few percent flat, so not quite sure where the month will end. It's not quite there, so I only bring that up because you've seen this top image. The column for January 2024 is blank, and that's because January is not over with yet. So on to my positions. I'm sitting at less than 3% cash. Game plan is to build that up. For those who follow along with this on a weekly basis, I'll just jump to it and say that I added OGI, Organigram, as a position, small position, among the basket of other names in that industry that shall not be mentioned, or maybe should be mentioned. Really don't know. Don't really know how the algorithms work. So I added that. It fell. I bought it on the dip that occurred, I think, on Thursday. I think it fell 7%. For those who don't know, BTI is entering, well, 3 tranches over the next, call it, year into Organigram, and it falls proportional to the dilution that occurs as a consequence. At least one might think, even though I can't remember the shares, but I think the shares would have out diluted it by 15%, and that's interesting because Organigram's about 15% roughly off of its interim highs, so that final 7 or 8% fall that we saw on Thursday would then make that a correct adjustment for outstanding shares. It's kind of funny, SurgePay, which I don't own anymore, SurgePay did that, and they raised I can't remember what they did. They raised money and diluted shareholders. They did something, whether it's convertible debt or whatnot. But SurgePay, I think, then fell 15% because that's about what they got diluted at as shareholders. It's fascinating to see these things occur. It falls 15% on the day of the noted dilution, or inevitable dilution, however you want to phrase it. And then the next day, then, like within a couple of days, it then was back to break even, as though the correction never happened. Because I suspect I just can't bring myself to believe that real institutional money thinks this way. And I don't really know how well uncovered SurgePay is anyway, but I just can't imagine someone saw it down 15% and then said, and well, I do believe this, but I can't imagine someone saw it fall 15% and then say, I'm going to buy the dip because it's now cheaper. Because then the question is, cheaper on what level of analysis? Like, if they diluted the shares by 15%, then one could say, all else being equal, for simplicity's sake, that the earnings per share fell 15%. So it's not any cheaper, it's not any more expensive, it's the same. The only difference is that the shares outstanding increased, so the price fell to account for that, to then moderate the same earnings per share metric. But I know damn good and well that a lot of people, at least retail people, don't think that way. They think this is the time to buy the dip. It's like, but for all intents and purposes, you could have just well bought it before the dilution had you not known that there was a dilution. So this is the consequence of stock prices being a mere floating abstraction to most people that is detached from any fundamentals. It's like, yes, it is on a nominal dollar terms cheaper, but on a fundamental earnings per share basis, it's not any cheaper. But so I bring all that up and went on that tangent to explain the Organigram situation. But other than that, like I said, I think what 2.44% into the week up. Yeah. So that's that. Uranium's doing what uranium does. It's pulled back. I think I was up 60%. Now I'm up 51%. Don't know what to tell you. I'm waiting for the offshore names to release their Q4s so I can review that. Kodiak Gas Services, KGS. I thought about doing a brief write-up if you're interested in that. Between them buying out in December, another compressor company, and then I just saw what I consider a reputable individual release an update, if you will. Pretty much brought it to email subscribers' attention. I could talk about that. There was a oh my gosh, I'm really drawing a blank here. I am suffering. Some Value Investor Club. There was a few months ago. It might have actually been before I wrote my piece. I'm not quite sure, but it was brought to my attention that there's a Value Investor Club article written on it. So I could do a quick update on those matters if anyone's interested. And then I recently did an update on, as you'll see, where is it? USAP. Where's my USAP? Here we go. USAP, Universal Stainless and Alloy. I did a update on them. It might only be in written form. I don't think I made a video on it now that I'm thinking about it. So if you go into the description, click on the link, go to my Substack page, and then you'll see my posts, and then in there you'll see that I did an update on Universal Stainless and Alloy. I thought about making a video. Now that I'm thinking about it, I don't think I did make a video. So anyway, they changed auditors in December, and as such, their Q4 is coming out late. Their 10Q Q4 is coming out late in March, but Mr. Zimmer was kind enough, I hope that's the CEO's name, was kind enough to give a little brief, tentative conference call about what developed over Q4. So I covered that to the best of my ability. So there's that. And really, that's about all I have to say on my weekly performance update. Yeah, so we'll leave it at that. I'm doing some different things on this channel. The whole point, at the beginning when Cup of Coffee Capital came around, January 1st, 2023, I was going to write articles and I was going to publish videos. And then I published videos in a slide deck kind of fashion, but that really hurt my writing and publishing. So I sacrificed writing to make videos. And I really don't like that. It'd be nice to do both, but seemingly I can't or won't. For whatever the reason, I don't. And that's fundamentally what matters. But I can write articles and then read them to you and show you the same thing and actually discuss things in a more articulate fashion and specific fashion and not leave out details because I forgot them, because there's 80 details and I can only remember 55 of them offhand. But people seemingly because ever since I started doing it in this format, besides the content to some extent changed, but immediately when I started regularly publishing and reading to you all these articles, the subscription rate fell off a cliff. And it wasn't the quickest or anything, but it definitely fell off a cliff. And I won't make any further comment on that. So this is what I'm doing. This is what I probably plan on doing. And that's that. And I guess if anything, the YouTube channel will just be a nice little extra for the Substack subscribers to go over and listen if they don't want to read, especially since some of my articles are extremely long, thousands of words. People don't have time to read, so whatever. So you can listen. I mean, I'm guilty of that in large degree. I predominantly listen to books now and not read them, so it's kind of nice to. And I think there is a podcast function on Substack, but for whatever the reason, I'm not doing that, so I'm doing this. This channel's already going, and so that's probably what this turns into. I don't know. But with out of the way, that's what's going on over here. Thank you for watching, and until next time.